Good afternoon and welcome to GrainTV. It's April 15th, 2013. I'm Logan Burgess. To my right here is Brock Shimano. Well, we had some outside factors really weighing on the commodity market in general here coming out of the weekend. We had China reporting Q1 GDP. We actually saw the Chinese economy contract when comparing Q1 of 2013 to quarter 4 of 2012. So that certainly got commodities in general on the defensive. If we jump into fire tip here, you can see at the bottom of the trading matrix here, we had crude oil trading sharply lower. Gold was down roughly 10% here on the day, and we had the S&P 500 losing ground there as well. The grain market was not immune to really this pressure from the outside markets. We had corn down 11 3/4 on the May contract. Soybeans off 18 cents, and Chicago wheat down 21 cents. You know, turning back to the fundamentals in the grain market, Brock, we did get the export inspections report out today. It really didn't seem like there was enough there to support this market.
Yeah, I think really all the fundamental news that we did get today was overshadowed by what was going on in China and some of those outside markets.
Right.
If we take a look at the numbers, though, for export inspections, corn was reported at 14.7 million bushels, just on the low end of expectations there. Soybeans coming in at about 4.8 million bushels, a continued slow pace of exports for soybeans, and for wheat, we came in at 23.4 million bushels exported this week. But let's take a look at where we're standing for this marketing year. If we take a look at this chart here, for corn export inspections, you can see the red bars are what we are actually seeing for weekly exports leaving the country. The green line is what we need to be seeing to meet the current USDA forecast of 800 million bushels of exports this year. We did fall a little bit short. On the year, though, corn is only about 14.4 million bushels behind pace to meet that projection by the USDA. If we turn over to wheat, a little bit of a different story. We've been having pretty good export sales over the last 7 or 8 weeks here. We've really caught up on the pace to meet the current USDA projections, and we actually exceed it now by 8.7 million bushels. We're ahead of the pace to meet the current USDA projections. So we continue to see the same story for export inspections. Corn right within analyst expectations for the most part. Wheat, pretty good showing, and soybeans really a pretty poor showing once again this week.
Yeah, you know, we had those kind of weak export inspections for soybeans. We did get the NOPA numbers out today. That was the crush data from March. And if we jump into that report, we see 137.08 million bushels of soybeans reported crushed for the month of March. That was a little bit better than what the trade was expecting. But kind of as you said, you know, we have relatively weak export inspections this morning, and really outside markets were weighing on things. So that NOPA number, while it was good to see a strong NOPA crush number there, we have seen the USDA revise their crush expectations higher here in the last couple of WASDE reports. It really wasn't enough to support that market today.
Yeah, I just really think the outside markets are really weighing on the commodities in general, especially the news out of China. Soybean markets are greatly affected by what's going on in China. They're our #1 purchaser of soybeans, so that really weighed on that going here. This afternoon, we're going to get the crop progress report. Early indications are for a 2 to 4% planting progress for corn. That's going to be the first reported number this year. You know, a lot of the planting progress has happened in the southern part of the United States, in Texas, the Gulf Coast region. So we haven't seen a whole lot going on in the I states, Illinois, Indiana, Iowa. So that's something that we're definitely going to have to monitor, as we know that the wet conditions persist and pretty cold temperatures are out there as well.
Yeah, you know, absolutely. If we look at kind of central Iowa right now, we see soil temperatures about 20 degrees colder than where we saw them at this time last year. And take a look at this model here that we put together. Basically, the green line is the planting pace for corn in 2012. We know that exceptionally early planted crop. You know, kind of the average here is the black line there, the 10-year average for planting pace. And then here we have this mid-May, right around May 15th, some certain benchmarks where, given the pace of planting, what we can expect for final acreage. And if you take a look here, if we see 70% of this crop planted by May 15th, we expect no change to final acreage. If we see 55% of the crop planted by May 15th, we'd expect a 1% reduction. And if you get down to only 40% of the crop planted by May 15th, we'd expect a 2% reduction in acreage. Certainly, this is a story to keep in the back of our minds, because we know that the forecasts right now are for things to remain very wet, very cold across much of the Corn Belt for the next week or two. So is weather going to present a planting window for producers out there? That's anybody's guess, but right now there's serious concern that, given the forecast, it's going to be very hard to get this crop in a timely manner. What does that mean? We could see a lower acreage than what the USDA projected in March, and that could put a little bit of a bid under DEES 13 futures. Right now, not a lot to be done on that front, but keep your eyes on those Mondays crop progress reports here. In the next week or two, we'll get a better idea of that, and we'll keep you posted on that here on GrainTV.
Yeah, we'll be updating our models all throughout the crop year
Right.
as we're getting started here on crop progress. Those come out every afternoon at 3 p.m., every Monday afternoon at 3 p.m. Central Time. We'll be tweeting the numbers once they do come across the newswire. At GrainTV is where you can find us on Twitter. Check us out on Facebook or get a hold of us at 877-472-4607.
Have a good one.